more enduring things like results. Godrej Consumer Products just announced its numbers yesterday, and it was a good set of numbers at a time when many companies are not growing their revenues. Godrej reported a 10% growth in its domestic revenues, 6% growth in its international revenues, a blended revenue growth of 8.3%, and operating margins as well up actually from 17.7, it rises to 18.5. So good growth, though the street was expecting a little more. Adi Godrej, chairman of Godrej Group, and Vivek, the managing director of Godrej Consumer, join us now. Good morning to both of you gentlemen. Mr. Godrej, to you first. Revenue has not been growing for most companies, for most products. You all have reported a 10% growth in your domestic revenues. Do you think you can maintain this pace of growth? We hear of a fairly deep rural distress with unseasonal rains and now probably deficient rains staring. So is 10% maintainable?
Yes, I think so, very much so. Even rural demand is growing quite well for us. Even in the January-March quarter, when there were unseasonal rains, our rural growth was higher than our urban growth. So whilst there is some distress in the rural areas, consumption still of essential items like ours is continuing reasonably well. Of course, if the monsoon turns out to be not too bad, then I expect even a greater growth in the months to come. If you have seen, SkyMet, the private agency, has predicted a more normal monsoon than the Met department has predicted.
Okay. You said your rural growth was faster than your urban growth. Can you tell us how much of your revenues come from rural areas? And when you say fast, how much faster was it?
I'll let Vivek answer that.
Sure, Vivek.
About 30% of our revenues come from rural India. Our rural growth last quarter was 17%. Urban growth was 9%. And so rural grew at almost 800 basis points higher than urban growth.
Okay. Mr. Godrej and Vivek, good morning. Mr. Godrej, I just wanted to ask you about your international business, because, you know, 50% of your consolidated revenues comes from the international operations, and Africa has played a big part in that. How has the Africa business shaped up this time? And on the back of the 20% growth that you've seen this quarter, what could you expect to see in the quarters to come? Would you expect any slowdown, given that, you know, there's been currency depreciation over there? The markets are not doing very well, especially in some of these African nations.
We don't expect a major slowdown, although there are problems. The biggest problem, of course, is that some of them are oil-producing countries and oil prices are low. So Nigeria, Angola, where we have operations, are oil-producing countries. The other problem is their currencies are depreciating. So when you translate it into rupee growth, it's much low. Almost all the international currencies are depreciating to the Indian rupee, which after the US dollar is perhaps the strongest major currency in the world. So we expect African growth to continue because consumerism is rising. We feel our products, which are directed to the bottom of the pyramid, help our businesses there grow quite well. So we are quite optimistic about the African growth even in this financial year.
Okay,
so Vivek, would you like to add anything?
Yeah.
So Vivek, when you say optimistic, what kind of growth would you outline for FY16? Would it continue to be in the 20 to 25% range for Africa itself?
I think what we are looking towards is more constant currency growth. And what was interesting in this year was this perhaps was one of our best years as far as international business performance was concerned. However, the one part we can't control is the effect of currency translation. So on a constant currency basis, I think Indonesia and Africa both have been doing very well. And Indonesia grew at 21% this year, Africa at 23% this year. So our hope would be, again on a constant currency basis, would be to maintain, if not better, this performance level.
Okay. I wanted to come to margins, Vivek. I mean, there has been an improvement in margins. I would assume this is because of rock bottom commodity prices. Do you see that advantage continuing?
Absolutely, yes. You know, this quarter we saw our highest gross margins in over 3 years. And even in India, our EBITDA margins were actually the highest ever in over 3 years. And so along with, I think, improving gross margins, we've ensured that a certain amount of benefit flows into the bottom line while investing for the future. The gross margin improvements have been a result, as you correctly mentioned, due to a more benign raw material pricing environment. But at the same time, we launched a lot of cost reduction initiatives that are yielding fruit. And we're also premiumizing our portfolio. So a more premium portfolio allows us to extract more net sales value. I certainly do expect margin benefits to flow this year as well, and we will try and ensure that our profit growth remains ahead of sales growth.
So you would start reducing your unbranded business and get into more branded and more branded premium products?
Most of the unbranded business is actually exports of Indian brands to markets such as Angola, Yemen and Fiji. And so because of some of the geopolitical crises and currencies, those unfortunately took a near-term hit. But the portfolio in India is largely branded, and that continues to do very well, with us growing ahead of the market and gaining share in all of our categories. We will also accelerate our pace of launches and are planning up to 10 new launches this year as opposed to 5 launches last year. So that should give us additional growth as well.
Okay. Mr. Godrej, just coming back to that point you made about the slowdown that we're seeing in some of the African markets like Nigeria. You recently acquired another brand in Africa called Frika, and now you have bought 5 local brands in the past many years. Would you, consider slowing down in terms of further acquisitions in the Africa region? And out of the brands that you've bought so far, which ones are performing the best?
Well, most of our brands are performing quite well, and we would look at further acquisitions in Africa if they are strategically important. So clearly we won't just acquire for acquisition's sake, but if they fit into our portfolio well, and if we feel we can add value in terms of future earnings per share, I think we will continue to look for strategic acquisitions in Africa. And now we actually have manufacturing operations in several sub-Saharan African countries and marketing operations in almost every sub-Saharan African country.
I take your point, Mr. Godrej. Most of your brands are performing well. Most of your stocks are performing well. They are great wealth generators. Then why are you still invested in Geometric? Will you sell out?
No, I wouldn't like to comment on that because I'm not on the Geometric board personally.
Okay.
Of course, it's a group company, but we will certainly look at Geometric from a strategic point of view.
All right. Just another question I wanted to ask, either of you. Vivek, what about ad spends? Since you expect to continue to pile up on gross profit and gross profit margins, would ad spends be at this 230 crore quarterly run rate?
We will try and manage our ad spends to somewhere between 11 to 12% of sales. Last year we ended at about 11.5% of sales. So we'll try and keep that number. The number will fluctuate a little bit quarter over quarter depending on new launches. But at this stage we feel fairly comfortable to keep it within that range.
I think an important factor, if I may mention, in the fourth quarter results was that our advertising expenditure in that quarter rose by almost 60% over the expenditure in the same quarter of the previous year. So we have been investing a lot of our additional margin generation for the future.
All right, Mr. Godrej and Vivek, thanks for joining.